And with this, I will move to our next and basically last substantial session, where we will have three speakers, all very knowledgeable, very experienced, very professional, and I'm sure they will have a lot to tell us because this last couple of days that we've been discussing these issues, we've heard a lot about uh, the support that countries need, whether it's in terms of technical assistance or using support by international finance institutions as anchor investors. And these are the type of issues and that our next speakers work on. So I have the honor to actually introduce our three speakers, and we will start with Lisa Klinger, who works at the European Commission in DG International Partnerships. Then we have Maya Hennerkes, if I correctly pronounce your name, Maya. She's Director of Climate Strategy and Delivery at the EBRD. And then we have Berit Lindholdt-Lauridsen, Senior Operations Officer at the International Finance Corporation. I will start with Lisa, who, as I said, she works at the International Partnership Directorate of the European Commission. And being part of this partnership directorate, Lisa, you work a lot with countries outside of the European Union. And I was wondering what do you think international cooperation can be really important in helping scale up sustainable finance, and particularly developing green bond markets in other regions outside of the EU region, and with particular focus, of course, and particular interest for us in the Eastern Partnership countries and Central Asia, for this matter. What role can the EU play to support these countries in their efforts to develop the green bond markets? Please.
Well, thanks so much, Nelly, and thanks to the OECD colleagues for also inviting us, the European Commission and the DG International Partnerships. Just briefly, I'm working for the unit on sustainable finance policy, so a dedicated unit to support our partner countries in mostly low and middle income countries to scale up sustainable finance. And let me say, I'm very impressed by the discussions that previously, and it's very good to see all the efforts and developments going on in the Eastern partner countries, but also in Kazakhstan. So I will just briefly start why we believe sustainable finance is very critical to support in the EU, but most importantly also globally. I mean, we all agree there is a huge SDG financing gap to bridge, which is only growing due to COVID-19 and let alone the geopolitical tensions and the war in Ukraine. So, but at the same time, we also know there are billions of assets managed by asset managers, banks, and institutional investors such as pension funds globally, which are not yet flowing where they're most needed, not yet flowing to investment that actually contribute to a just and green transition, to a recovery from the global pandemic. And here we do see sustainable finance as a key asset to steer capital, private capital, to projects that actually contribute to sustainability. And as you probably are very well aware of, the EU is a forerunner in setting up a very comprehensive sustainable finance ecosystem. At its core is the EU taxonomy. And I also listened in yesterday in the discussions and saw that Jean Kidney presented briefly our EU taxonomy. which is at the core of our ecosystem. However, let me also emphasize this is not the only aspect to consider, but also very important for us is the disclosure requirements for both financial companies, but also for corporates, looking at their economic impacts or their impacts on climate through economic activities and investments, but also vice versa. What impact does climate change have on economic activities and their assets? And last but not least, the Commission has proposed an European green bond standard that seeks to bring more transparency to the market, more clarity on what can be considered or which green bonds, so to say, also can be considered or aligned to the EU taxonomy. And happy to elaborate a little bit more in detail what this proposal entails. But I'd like to emphasize that this proposal is still being discussed currently among our co-legislators and planned to be adopted later this year or beginning of next year. But of course, it already triggers some discussions in the EU, but also globally. So we stand ready to share this EU experience with partner countries because we all know financial flows do not stop at borders, neither does climate change. So we need to have global actions and we need to develop credible sustainable finance frameworks domestically, but that also to some extent contribute to international interoperability and comparability to avoid fragmentations between all the different taxonomies, green bond frameworks, etc., mushrooming across the globe. And also in the Eastern partner countries and Kazakhstan, which is very good to see and very impressive how well advanced those countries are in setting up their own taxonomies. And that's why we stand ready to share our EU experience, but also try to contribute to a certain level of global interoperability. For example, also through our engagement at the International Platform for Sustainable Finance, which has just recently developed a so-called common ground taxonomy, comparing the two taxonomies, the EU one with the Chinese one, and coming up with a common ground, so to say. And in that regard, let me tell you that the Commission intends to set up a dedicated strategy to scale up sustainable finance in low and middle income countries that will define very concrete actions for the EU to support partner countries in setting up framework conditions, ecosystems, but also stimulate the market for sustainability related instruments. And to this end, we are now setting up a high-level expert group comprised of experts, of EU experts, but most importantly, experts from our partner countries from different sectors, financial sector, policymakers, but also corporates. And this high-level expert group will provide us with recommendations on the challenges, the very specific challenges in different regions, and also from different stakeholders, but also opportunities they see in terms of sustainable finance in our partner countries. And eventually, of course, this will feed into EU's action, external actions going forward. And I will stop here, but happy, Nelly, to elaborate then later on our specific activities in terms of technical assistance. Thank you.
Yes, thank you very much. Maybe just one question at this stage. I think it's true that countries in the region of the Eastern Partnership and Central Asia, Kazakhstan, they look very much to the EU because the EU is the leader in many ways and setting the standard globally. There is a lot, I think, the European Union and the Commission specifically can do to help the region develop further. But I was wondering more in terms of any specific financial instruments that exist and that the Commission has put in place to help the countries in our particular region. Is there something that you can share with our participants? And I think this is something that can be of great interest to the countries in the region.
Yes, certainly. Thanks a lot, Nelly, also for giving me the opportunity to elaborate more on the specific instruments that we provide. And of course, there is a large chunk of initiatives that we provide in terms of technical assistance that is helping partner countries to develop credible, sustainable finance frameworks, but also take up of sustainability related instruments such as green bonds. And to this end, we are just preparing an initiative, the so-called Global Green Bond Initiative, that will address challenges tackling both at the investors and the issuer side. That is, we will provide technical assistance to the issuer side to eventually issue a green bond, starting from a feasibility study, for example, but then also providing capacity for reporting, monitoring, and also setting up, for example, an adequate green bond framework. But also we would provide, which also relates a little bit more to your question, we would provide support for the investor side to eventually also crowd in private investors, for example, through de-risking mechanisms such as guarantees and blending instruments under our so-called European Sustainable Fund for Development Plus. And in this regard, we have now just recently established, and I'm very happy to announce this, a sustainable finance window. So that will help exactly to set up sustainable finance ecosystem and the issuances of sustainability related instruments such as green bonds, but also SDG bonds, blue bonds, gender bonds, but also impact investment funds and other investment vehicles, equity and corporates pursuing, most importantly, of course, sustainable objectives. And what is most relevant and has been discussed quite extensively in previous discussions as well, is that those instruments help to de-risk. One of the greatest issues for investors, of course, is the high perceived and real risk, also in Eastern partner countries. So that guarantees and blending mechanisms would help to de-risk and together with European development finance institutions, then eventually also crowd in or catalyze private capital for investments.
Thank you very much, Lisa, for this information. So we can confirm that the instruments of this fund for sustainable development will be available, like guarantees will be available to countries in the Eastern Partnership region in particular. So it's...
And happy to share a link in the chat.
That's what I wanted to ask you, if you can provide more information and how countries can approach the fund and how they can really benefit from Okay, so thank you very much for this information. I think it's very, very important, and we will be reading with a lot of interest your documents, but also trying to understand how in practice countries can benefit from the fund. With this, I will move to Maya from EBRD. Hello, Maya, and thank you for being with us. Of course, I don't need to introduce EBRD. Everybody knows what you do. I think you are the biggest international public financier par excellence in the region. You've been present in the region for many, many years. And I think you've done so much work in so many ways, supporting the development of capital markets, probably more generally. This last year, supporting for the last 10 years at least, supporting the development of clean energy markets through your environmental credit lines, dedicated credit lines lent to selected commercial banks in the region. And most recently, you've moved into the green bond markets by playing also an important role, particularly as an anchor investor. And we know that you've been involved in a few of these green bonds issued in the market. And I was wondering whether you can tell us a little bit more about your work on helping countries and working with issuers and investors in a way to bring such green bond issuances to a successful fruition. Please, the floor is yours.
Yeah, absolutely, gladly. Thank you very much, Nelly. Absolutely right. We are, of course, we're talking here about green capital markets, but we need to see this topic for us at EBRD. It's obviously part of our overall efforts to green financial systems, very broadly, from all the way upstream, working with regulators, working with ministries, working with the authorities to set the enabling environment right for green finance in all its different instruments. To all the way downstream, working with individual companies, individual financial institutions, and the green bond topic is one component of our green economy transition approach, which is really what guides us. We've set ourselves the target to become a majority green bank by 2025, so that at that stage, 50% or more of our annual approvals will all be dedicated to climate action, to green. And we've already overall, as of a couple of months ago, I would say, we've already invested over 16 billion in overall euros in energy efficiency, climate change, sustainable resource finance, etc. So we have, this is all under our green economy transition approach, and the greening of capital markets, or the fostering of green capital markets, is obviously a component of that. And as you also mentioned, we're very active in the Eastern Partnership countries. We've been working specifically on related to green bonds. We've been working in Armenia, in Azerbaijan, in Georgia, in Moldova, Ukraine, Kazakhstan. So, for example, in the case of Armenia and Kazakhstan, we've been working more through technical assistance, and then in Georgia and Ukraine, and we've seen an example from the colleague who spoke earlier, as anchor investors, as you mentioned. So let me maybe give a quick overview of the overall universe of how we do that. So first, as I said, we support regulatory developments. This is sort of with our attempts to help shape the enabling environment for green capital markets. And we do that through technical assistance. We have, for example, a long-term engagement in Kazakhstan, where we recently developed together with Kazakhstan policy recommendations for green capital market incentives. These are recommendations that I'm sure this crowd is going to be very familiar with. Key recommendations included to, for example, develop transition pathways for the economy. That includes also a recommendation to think about a national sustainable finance strategy. Of course, the alignment of fiscal spending, so looking at taxes and subsidies, green procurement, emission trading schemes, and so forth, so on and forth. Increasing market transparency, we see that obviously broadly as an issue, not just in green capital markets, but in green finance or sustainable finance overall. So this is, of course, around ESG reporting requirements, green labeling, these kind of things. Supporting the green finance transition overall. So these are the type of recommendations that we've come up for Kazakhstan. And just to give you an example how we do this, sort of at the regulatory level. But then if we move one level down, indeed, we work with the issuers. We do think that green bonds, of course, are a very impactful instrument that we want to promote and foster. And so we can provide technical assistance for individual issuers. That can be a corporate or can be a financial institution. And with the aim to accelerate the green bond issuances. Because what we also need to, I think, recognize is that, you don't issue a green bond just overnight. It takes quite a lot of preparation, sometimes years or a year or years, and it requires a lot of internal ESG or climate governance in those institutions so that they're ready for such an issuance. And we're doing this right now as an example with 3 financial institutions. One of them is in Armenia. And what we do with them is a green bond readiness assessment. So we help them really to assess, where are we, what do we need to get ready for such an issuance. And this is, of course, for first-time issuers. The way what we expect from an issuer that we support, and we've heard a lot about the standards earlier today as well, is that they need to follow the requirements of the green bond principles of ICMA. We look at other standards as well. That depends a little bit on the jurisdictions. We obviously require third-party verification. And yeah, we think this is really important, particularly in the Eastern Partnership countries, where, as we've also already identified today, the green bond issuances are still quite at low levels. Yeah, so we think it's important to follow the international standards and benchmark against those. And then if somebody gets ready and issues a bond, especially if it's a first-time issuance, we're obviously also interested in it as an investor. So if the green bond issuance, for example, complies with all those things that I've just mentioned, you know, the green bond principles, ICMA, some other requirements that we agree on, then we can consider it for anchor investment. And we've done the first of those in 2017 in Lithuania, and we're now at almost 1 billion in green bond investments in over 30 separate issuances. So you can see from 2017 to today, it has been a very, very important increase, and this is our own investment journey, but I think it's also a good example about how the instrument as such has picked up, yeah, and the interest of investors like ourselves in such instruments. We have most of the issuances still in the EU countries. That's true, but there have also been others in Georgia, for example, from Georgian Railways. We've seen Turkey, we've seen several in Egypt, and this is pretty. I think this is significant. It is not only the EU countries anymore. So we're working actively with other countries as well to get ready to deliver on those instruments. And yeah, I think we do see that there's still we already see an exponential increase in issuances in our countries of operation, but we also see an opportunity for much more, yeah, which is why we're supporting individual issuers very gladly on those journeys. Now, what is obviously the challenge is that the markets need to develop credibly and transparently, because, you know, of course, investor trust is a main potential hurdle when it's not there, and it's a main driver for the success of such an issuance. So yeah, we work, as I mentioned, with the issuers to make sure minimum requirements are met, green criteria are met, so no greenwashing. We have declined, in fact, several participations in green bond issuances just as recent as last year, where we felt that our requirements could not be fully met. So we obviously are very aware of the downfalls of potential, you know, non-robust frameworks or even greenwashing attempts. So this is something that collectively I think we obviously all agree on. And maybe one thing I wanted to mention is one of the later or more recent trends is that we see sustainability-linked bonds. So it used to be mainly green bonds, very specifically. The green bonds obviously have the green use of proceeds, but we see now a very interesting trend in more sustainability-linked bonds as well. Because the sorry, my child is at home because he's sick and he is making noise in the background, so I apologize for that.
No problem.
This is the working from home with children that we've all learned to appreciate during the lockdown. Is still ongoing in my case on some days. Okay, so let me come back to our topic here. So sustainability-linked bonds is a new trend. We've done our first investment in a sustainability-linked bond in a Greek utility, PPC, in 2021. That was also the first such issuance in our countries of operation. And the important distinction, we've heard it, is obviously that they are for general purposes. So the financing is not linked to a green or a sustainable use of proceeds, but there is a link with the company's performance on decarbonization and on other sustainability goals. So we have since this first issuance invested in 5 of those. And that was about, I think our collective investments are close to 200 million. With the total issuances, however, exceeding 2 billion. So I think there's a lot of leverage that we can achieve. And this included also the sustainability-linked bond that we've seen earlier in the colleague's presentation from Ukrener in Ukraine. So yeah, we think it's an important one. Maybe a third type of bond I want to mention, just to see that we're trying really to think creatively how we can use green capital market issuances to to increase the allocation of funding generally to green use of proceeds is that sometimes we also invest in ordinary bonds that do not have a green use of proceeds. So for example, a standard MREL bond, for example. And then, however, we agree that the client destines a multiple, for example, let's, for the sake of the argument, say we invested 100 million in the MREL bond, then we agree that, for example, 1.5 or whatever the multiple is, that is on a case-by-case basis, of the same amount needs to be destined by the issuer in green or sustainable projects. And that is obviously also something that we will then check through reporting and so on and forth. So even with an ordinary bond, where there's no green use of proceeds, we've been managed to get green commitments from issuers because they then commit to funding a multiple of this amount for specific green purposes. This is an example, one that we had a recent Tier 1 capital loan with the Bank of Georgia. And that was actually also the first time that we used this financial instrument in our countries of operation. And yeah, this again requires the financial institution to report on their green performance. They often use this to learn, and then they start establishing their own green bond frameworks, and later on maybe issue a green bond altogether. And that is, however, something that we've seen so far in the EU only, not really outside yet, but it can surely be done. And yeah, again, just one last word on how this is really for us picking up, and is such a strong instrument that we support. So we think that this year we may get to investments around the order of 10% of our annual approvals for such green bonds. And we do think that apart from the ability of the green bonds to mobilize climate finance really at scale, they also bring a process of corporate climate governance on the issuer. So because they get ready for a bond issuance, they set the internal processes right, they set their internal policies right, they learn about how to, distinguish what's green, what's not, how do we measure it, how do we report on it. And so we do think that has also an additional and a really, really important leverage effect, which we then again also support through our green economy transition approach. I'm gonna stop here, but again, of course, I'm available for any questions you may have on this.
Yes, thank you very much, Maya. I think I don't need to say, because everybody in the region knows that EBRD is always there to support countries and also private sector companies in their efforts to get financing for anything green at this stage. But I'm actually very glad to hear that EBRD is ready to decline, offers when you feel that the bond is not well structured, is not very credible, or the issuer is not very credible in their intentions to invest in green projects. So it means that not everybody can just hope that getting EBRD on their side will help them get to the get the money in the end of the day. But having you on the panel, and I wanted just to benefit to ask you what may be the future of the market. Do you have an idea how you see this market? Because we've seen in a very short period of time, last couple of years, when there was an, as I call it, outburst of energy, and there were the first green bonds issued in the countries. But are we going to see more of these issues, green bond issuances, or somehow this will be, unfortunately, not followed up by more of that?
I think so. I think so.
I know that the period is very difficult. We live in very uncertain times. But if you have any idea and any, how you see the future of the market? Yeah,
I mean, of course, we do see some anecdotal evidence, specifically now in the Eastern Partnership countries, and because of the war that is happening on Ukraine, that we do see some anecdotal evidence that the investor demand is reducing. So there's a bit less appetite right now, in the Baltics, in Poland, neighboring countries. However, I hope that this is a short-term thing. We have also seen the example of a specific client of ours that recently postponed an anticipated issuance because of the current market conditions. So it is, of course, the war is disrupting the capital markets development. However, we do think that this is hopefully, a short-term occurrence, and afterwards we do think there's a strong potential also when we think, and we've heard about quite a lot before from Stanislav as well, and there is, I think, a big potential for the rebuilding of Ukraine, also for the transitioning of the neighboring countries of their energy systems to be backed up by capital markets transactions. And as I mentioned before, obviously you don't really prepare for such a green bond issuance overnight. It takes quite some time. You need to have a credible governance structure in place, and all of those things have been really underway. Specifically in Ukraine, we've seen a lot of it, and I think it was shown very clearly at the previous panel. And I think what is now important for us is to not lose the focus on the climate change agenda. We really think there's a massive opportunity for Ukraine to build back better, to build back with the integration of climate change considerations in all those post-war reconstruction efforts, and also for the neighboring countries, of course, to, those that still have a high dependence on Russian gas, for example, to really accelerate the transition in their own countries. We need to expand renewable energy production, and that needs to be financed. So, of course, we can lend to it, but one way of financing it is, of course, through bond issuances. And then we do think, and this is again why I mentioned the example, how we work in Kazakhstan, for example, with the authorities to, we think there's a potential to accelerate this by developing broader sustainable finance frameworks. So we've done recently this work with Lithuania. We're currently underway to support also Latvia and Estonia in their sustainable finance roadmaps. And so I think that will really help to set the enabling environment right, so that green and social projects, and I think social is also important here again, because I've mentioned this recent trend to sustainability linked bonds. So it doesn't have to be only green anymore. We can also really focus and include the social aspect here and social projects, which we also support, of course, strongly. And I think this is really helping. So again, establishing sustainable finance frameworks, I think, is something we should all think about. We should consider. We're working, as I mentioned, with several countries on those. And then I think there's an opportunity. And on a global scale, of course, we do see that green bonds, sustainable bond issuances, they are very much on the rise. So I don't think it's going to go away. We're a little bit hit right now, but I hope we come back with strength and then use it for good reasons, in the reconstruction and in the transformation still of our economies here. I think it's, yeah.
Yes, thank you very much, Maya. I think these are very, very good and very logical and well-tested, I think, messages and recommendations. And let's hope that the war will be over, as very soon, sooner rather than later. And
indeed,
we have really very short term or medium, not very long term at least, consequences of this war on the markets. With this, I want to thank you and to move to our last speaker. And Berit, thank you very much for being so patient and waiting until the end of the meeting and the discussion. And particularly, I don't know whether colleagues realize, but you're actually in Washington. And it's very early morning in Washington. I'm really grateful.
Not any longer.
Not any longer, you're right. We are beyond the early morning stage. Yes, but still, thank you for being with us. And we invited you because you work on these same similar issues, and you work in different regions, obviously, and there are some other mechanisms like the emerging market green bond funds. But before that, I wanted to ask you on the side of IFC, as IFC person, what exactly is IFC doing in the world, maybe not only our region, to support countries to develop green bond markets? And then I will ask you about the specific emerging market green bond funds that you're working on as well.
Yeah, so I will assume that most people know that IFC is a member of the World Bank Group, and we share the group's targets on end poverty and boost shared prosperity. IFC is the private sector arm of the World Bank, and we are the largest development organization focused on the private sector. Probably most known that we are an investor and operate as an investment bank, providing loans, corporate loans, project finance. Perhaps less known is the role that we have as an advisor, advising companies, financial institutions, including regulators, on how to create markets, develop markets. And we mobilize money. So we, through our syndication programs and through our asset management company, we have private sector investors investing alongside IFC. And this is actually where the green bond funds come in. So if we look to the bond market and the work that we do here specifically, we have a unique profile because we are a one-stop shop. We are an issuer, has been an issuer of green bonds since 2010. We are an investor in green bonds, often as an anchor investment. And then we provide the technical assistance to develop the market, and we mobilize alongside our investments. We invest in both emerging market financial institution bonds as well as corporate bonds. And as already mentioned by EBRD, we begin to see that market broaden from the green, social and sustainable to the sustainability linked market. On the advisory side, IFC has played a key role in the market since the early days. Some of you may know that the first coined green bond was actually issued by the World Bank Treasury, and IFC issued its first bond in 2010. But we were involved in setting up the green bond principles, and we are a member of the EXCOM and has been since the inception in 2014. The IFC is also a secretariat for the Sustainable Banking and Finance Network, which supports financial sector regulators and industry associations in emerging markets to develop sustainable finance products and the whole market. And in this context, also the green bonds. And then we have technical assistance programs, like for instance, the Green Bond Technical Assistance Program that provide advisory service to potential financial institutions, potential issuers of green bonds. And this is actually complementing the fund structure. So if we look at the fund structure, the idea of the Emerging Green Bond Fund, which was launched in 2018, with Amundi as the asset manager, was really to mobilize a fund to invest in alongside IFC into this fund and invest into emerging market green bonds issued by financial institutions. It was to create the demand in the market, and it was to mobilize private capital money. So the fund set up in 2018 closed at $1.4 billion US. It was with an anchor investment by IFC by 256 million. The rest is mobilized in the market. There are private institutional investors, but also some IFIs has invested in it. And the fund is expected to deploy $2 billion US in its lifetime of 7 years. The objective was to stimulate the issuance of green bonds in emerging markets, and and it has won several awards. It is a layered fund structure, so there is a building credit enhancement system, but it's the first program that combined the demand side, where you actually create the demand for the bonds, and at the same time develop a supply mechanism, which is the Green Bond Technical Assistance Program. What is the criteria for the fund is that it only invests in bonds that comply with the Green Bond Principles. And there are additional environmental and social covenants, or that they will look to the issuer's E&S performance and strategy. It will only invest in what's deemed investable. So there is a credit threshold, of course, but there's also aspects of what they cannot invest in. For instance, they cannot invest in fossil fuel projects. It's focused on the E&S of the issuer, and there is a commitment to provide impact reporting, which is part of the Green Bond Principles. The fund's investments are also subject to constant monitoring, and that includes good governance, and we have actually seen that being executed in the sense that the Amundi Fund, the Eco Fund, divested from a green bond issued by State Bank of India due to the Indian bank's involvement in coal mining in Australia. So there is, that's where the E&S strategy kicks in. It may be a green bond, but if the E&S of the bank is not up to the standard of the fund, then ultimately they can decide to divest. If we look to what has it actually invested in, I can quickly summarize the impact report for 2021. It's invested across 24 issuers, and 15 of these are first-time issuers. And 6 of these 15 have actually completed the Green Bond training under the Green Bond Technical Assistance Program. Oh, excuse me, there was 4 of them that has completed the training, and there's 6 of them is through private placements. So the fund can actually also do private placements. It's invested in Brazil, Chile, China, Curacao, India, Philippines, Qatar, Turkey, and United Arab Emirates. And it's funding renewable energy, energy efficiency, green buildings, green transport, and water management. What is perhaps less known is that there is a similar fund, a green bond fund for the real sector, for bonds issued by the real sector. And it's a same structure. It's with an anchor investment by IFC, and the fund manager is HSBC's global asset management. And this fund is set up to invest in green bonds or sustainability bonds issued by real sector or municipalities. It also have a technical assistance component. And if we look to the impact report, this was only set up in 2020, so it's still in its early days, but in its first impact report that came in 2021, it was invested in Ukraine, Georgia, Turkey, Romania, Poland, Nigeria, Kenya, and South Africa. And the sectors are renewable energy, water, wastewater management, energy efficiency, green buildings, and green transport. As part of the EGO Fund, there is actually also an annual publication put out by Amundi and IFC. It's called the Amundi IFC Emerging Market Green Bond Report. And this year's report was just released yesterday. And this report is an analysis of how is the global green bond market developing in the emerging market. So globally across emerging markets. And part of it is also assessing what is the readiness and what is the maturity of the various markets. And you will actually find in this report that a number of the countries in this region has been assessed on their readiness. I think I will pause here and allow you, Nelly, to dig deeper if there's something I missed on.
I think it's a very interesting presentation and information you give us. From what I hear, and I think everybody hears, is you work in emerging markets, but not in the markets in the region where we work. So these funds do not really cover the countries in our region. And I was wondering why.
That's not totally true.
Okay.
So the Regio Fund is actually invested in Ukraine and Georgia.
Did you say this? Because I missed it.
Yes.
Sorry. Okay.
So it is. It's part of the mandate. If there are any bonds that fits the mandate of the funds, they can invest in it. It's not that those countries has been excluded, but they need to be to meet the mandate of the fund.
Okay, sorry for that. I missed it, but it's a very valuable piece of information. Then my next question would be, how could potential issuers, be it in the banking sector or maybe afterwards in the real economy sector, how can they find information about you, how they can get access to you?
So we have local offices in I believe all the countries of your region. So that is a starting point. Reach out to the local office. There is also electronically on the website information on the work we do under the Green Bond Technical Assistance Program. There's even online learning modules, and so you can tap into online learning. There are training programs to be rolled out, and I actually think your region is coming up soon. So stay tuned. Otherwise, I'm here. You can always
I think this is perfect. Of course, we can do our homework and search for this information, but I think it will be much easier if you share some information with us and we start from there, and then go deeper and try to get more information from you afterwards. But we would really appreciate it. I would appreciate it, us at the OECD, and then we can share the information with our colleagues in the countries as a first step for those who haven't heard a lot about you and this opportunity. And in order to close the session and in the meeting in a way, I just wanted to ask you, is there any particular message that you want to give us from your experience in other regions that can be of interest to the countries in our region when it comes to using green bonds, as a way to finance significant green investments in our region? Is there something that you think is really important, that as a first message that we need to to keep in mind?
I think we have talked about a number of them for the little that I have listened in today. There was the session on the importance of building the infrastructure of the market and how a sovereign bond can actually help doing that. There were the comments or the discussion we just had about where is the market right now. We see a slowdown in the growth in the market due to the geopolitical situations. I actually think that's not just happening in the sustainable finance space, it's probably also happening in the plain vanilla space. But when I talk to banks or companies that have been through the process of establishing a green bond program, for instance, a lot of the hesitation is typically, it seems to be too cumbersome, it's too demanding, it's maybe even costly. But the response has always been, it was worthwhile. It was perhaps a steep learning curve, but it gave the company or the financial institution a better understanding of its own business, a better understanding of where are the risks, where are the opportunities, and it gave them a sustainability branding in the market, which is increasingly important. We'll see how sustainable finance regulation comes into place. It's not just in Europe, it is a global phenomenon. We see that sustainable finance regulation becomes part of it. And it gives them the preparedness. They get ready for that regulation to come in place.
Thank you very much. I think there is, if I hear correctly what you say, it's once an issuer, you become an issuer probably for a second time, a third time, because once you get on on this learning curve, you
Yeah.
experience the
Yeah.
experience of
Yeah.
issuing,
Yeah.
and you start understanding very well all the regulatory requirements and working with investors. There is a chance that you will get back there and do more of that, which means that we can hope that our countries, and we've seen this already in Armenia, for example, there's been a double issuance. So I think we can hope that there may be more of this coming up.
Actually, if I may elaborate on that, what we have seen is that they come to market with a green bond, and then they maybe come to market with a broader sustainable finance framework where they can open up for green, social, and sustainability. Because sustainable finance is no longer a need to have, it's nice to have, it's increasingly a need to have, because it's a question of access to funding.
Thank you very much for this positive and promising message. I think it's a very good note to end our discussion and our meeting today. And I really want to thank three of you, because I think we are getting a lot of very good and useful information that we will be more than willing to share with our colleagues in the countries. And I'm sure that we will stay in touch, and we will get back to you in our future work and future collaboration. So I'm really looking forward to staying in touch and continuing our cooperation. Thank you, all of you, very much. And I think I can call the discussion at this session today over.